morning everybody. It's my pleasure to talk to you about Bannerman Energy. We have a uranium project in Namibia that's in very rarefied air. It's shovel ready at a time when the uranium sector is really starting to reward the small handful of companies around the world in the investor universe who are capable of delivering into the next few years of uranium market dynamics. You can find all of this on our website. So where do we find ourselves as Bannerman Energy? We've been working on our Etango project for a long time, and as I said, we now have one of the world's largest and most advanced uranium development assets. We're in Namibia, and I can't tell you how happy I am to be there. Ronnie and myself, Ronnie Beaver, our chairman, and myself were there last week. We received our mining license at the end of last year, and you can see that we're fully permitted and, as I say, shovel ready. Now, we've got a clear pathway to development, and that's very important as the uranium market starts to show the potential that we've expected and that the investors have expected for several years now. And what that really means for investors out there is our company and our asset is perfectly positioned as the uranium price starts to move into triple digits, closed at $107 last week. We've actually got an asset that can put money in the bank over the next few years. We do have an exceptionally large resource. This is just the one ore body at Etango, over 200 million pounds, and I'd like you to keep that in mind when I talk about our market capitalisation and the structure of our company. In addition to that, we do have assets within trucking distance, substantial satellite deposits, and the main Etango ore body is open at depth. Namibia has a number of very strong attributes for uranium. You know, I talked to a Southern African audience, and I think everyone knows that Namibia is a lovely place to visit, and it's a good place to do business, and you can get things done. It's clean. But for uranium, it has a couple of very unique attributes around the world, and that is a 45-year history of exporting uranium, 45 years of experience amongst all of the regulatory facets, 45 years of experience with all of the multilateral and treaty obligations that goes with exporting uranium. And with that comes a social acceptance that I don't think you can find anywhere else in the world. So you spend time in Swakopmund, you see how much of the infrastructure of the town was actually built by Rio off the back of its Rossing uranium mine. You talk to pretty much anybody, and it's just development. It's not uranium, it's just development. And so it's heavily supported by government, society, and because of a history of world-class environmental performance, it's well supported by a pragmatic and appropriate and stringent environmental regime. Beyond that, Namibia has a very clear mining code. So as a general investment destination for resources, you can tick through strong rule of law, the government loses court cases regularly, strong mining code, pragmatic and accomplished regulatory interface, all of the things that you would want as an investment destination in mining. The feature of Bannerman has been our long history with this project, with Namibia, and I've got to tell you, it's been a long time coming, this uranium bull market. We have used the decade-long bear market to good effect, and for investors looking at our company at the moment, you have the benefit of that patient, systematic, methodical de-risking that's taken place over more than 15 years. And on this slide, each of those key events were very significant steps forward, either in a technical sense or a financial sense or a permitting sense. And that has now accumulated to us finding ourselves where we are, perfectly positioned for the unravelling uranium bull market. Now, why do we have a lot of confidence that this isn't just a spike? You know, that for most investors, there's two uranium bull markets that you might be aware of. The famed one was the spike in 2007, but the better analogue for us today is the 1970s, the time when commercial nuclear power was really kicking off, when there was a lot of new growth, and it was driven by something that's a close analogue to decarbonisation, i.e. the oil crisis. So the world's energy markets were in an incredible state of flux. There was an enormous incentive for countries around the world to lock in baseload energy in the form of nuclear power. And that, ladies and gentlemen, is where we find ourselves now. So I see this 1970s as a much better analogue for how you can look at a bull market that should have a resonance time about as long as the last 10-year bear market. And when you look at this slide, what we've done here is we've taken the World Nuclear Association modelling. I'm pretty familiar with this modelling, having been involved in the working groups that did these numbers. You can see a demand line across the top. That's the demand scenario that we subscribe to, given the tremendous tailwinds behind nuclear power around the world right now. And then what we've done is we've stacked in those bars all of the tangible potential production. So those bars are current production, current secondary supply, mines around the world that are in construction, mines around the world that are in advanced development, Etango's in that bar there, and mines around the world that have got a tangible, credible enough development path that it's foreseeable that they will be uranium producers. So things are looking pretty good for the next few years, but they really gap out in the 2030s. And for a long life asset like what we have, that gives us a lot of confidence that we're not finding a $100 a pound spike at the moment. We are dealing now with the new pricing regime, which has been 10 years coming. So a quick corporate snapshot. So I asked you to keep in mind the more than 200 million pounds of uranium that we have in our one deposit. And that reflects very well against a market capitalisation of about $550 million Australian at the moment. Exceptional leverage. Exceptional leverage because of our scale, because of our price leverage to an increasing uranium price assumption, and the fact that we are focused on this one asset. There's no deleveraging value in our enterprise value that's attributable to other projects or exploration projects or uranium holdings. An investment in Bannerman is a focused leveraged investment on, as I say, one of the very few greenfields projects around the world that deliver scale and are shovel ready. Very strong cash balance, 35 million still in the bank as at the end of the year, no debt, and Gavin Chamberlain, who I'd like you to meet when you get the chance, who's our Chief Operating Officer, soon to be promoted to Chief Executive Officer. Gavin's been running a magnificent engineering process that has given us full flexibility in terms of continuing with our long lead item and early construction phase developments, whilst maintaining that strong cash position. And I'll explain why that's so important in a moment. Okay, so where do we tick all of the boxes? So first of all, very strong technical and commercial viability, exceptional leverage in the current sector. It's a highly conventional mine. Now this is really important. There aren't many uranium mines out there or many uranium projects out there. Both investors, but more importantly our key customers, are not mine builders themselves. Our key customers are nuclear utilities who are very good at producing electricity and really don't know one end of a mine from another. And they want the confidence that this is not a science project. It's not something that's got an unusual or innovative aspect. Quite frankly, in the uranium sector, our Etango project is as dull and boring and mundane as it possibly comes. And I'm sorry, Gavin, because you just don't have the most attractive and interesting child here, but I'm sure you'll make something of it. It's highly conventional. It's been de-risked at every possible turn over more than 15 years. And that's exactly what it wanted to be. We want it to just simply make uranium. As I said before, we're fully permitted. Now that's not only the mining licence, that's every environmental permit that enables us to construct and then operate the mine. including water pipelines, linear infrastructure, temporary power pipelines, the full list. We're very good at responsibility in Namibia, and we've got a very good team that I'll introduce you to in a moment. So ticking through each of those boxes. So with the uranium price at $107 at the moment, our cash cost of $35 looks very attractive. I couldn't say that for much of the last 10 years. You know, we had a time when uranium was trading at $18 a pound, and it's such a deep bear market that has promoted the optimism about the next 10 years of bull market conditions that I'm anticipating. Modest capex at $317 million US. This is a very big project. And what these factors mean is that over an initial mine life of 15 years, we'll be producing 3.5 million pounds. Expandable, as I'll talk to you in a moment. So what does that add up to? So at $65, which was our base case under our Definitive Feasibility Study, it produces a reasonable return. At $80, which I've been criticised lately for being conservative, music to my ears, at $80, it produces very strong returns. And what I want you to take from this slide is the leveraging. So the difference in price between 65 and 80, modest difference in price ratchets up a more than doubling of our post-tax NPV. And you can start putting uranium price assumptions above $80. You can take on board the criticism of me being way too conservative, and you'll see that it just goes straight to the bottom line and ratchets up the cash, the free cash flow. It ratchets up the NPV. And remember, we don't have exposure to other assets. There's no non-leveraged value in this company. We are pure leveraged to that equation. I told you it was simple. We've taken every opportunity over a long period of time to de-risk this asset, and that's the demonstration plant, which we operated systematically for 6 years. We've actually had it in production mode again. I was there on Friday because we're now producing final product that can be sent to converters as part of the path towards long-term contracting. Talked about the environmental approvals, strong support in country. And for us, the big ticket item is the grant of the mining licence at the end of last year. Thank you, Tuapewa. Please also meet our local in-country independent director, Tuapewa Kadikwa. She's here to learn from you and also teach you about Namibia. Now, that's pivotal for our company because it positions us so uniquely in our uranium universe, and it means that we're fully unlocked going into 2024. We've got a long history of sustainability. I'd love to talk to you about that individually, and very deep experience in both uranium and Namibia. So Gavin Chamberlain, soon to be CEO of the company, Mike Leach, former managing director of the Rossing uranium mine when that was the largest uranium mine in the world and still the closest analogue for Etango. Olga Sklyokova, she's joined us in the middle of last year from World Nuclear Association. It's her job to write long-term contracts. She's been in the sector for more than 15 years, done everything from uranium modelling through to selling enrichment in the US, a deep understanding of the entire fuel cycle. Werner Ewaldt, our managing director in Namibia, was former mining manager at Rossing. Mining's our single largest cost, so we want the best expert in the country running our company in country. And strong support at a corporate level from myself and Steve Herlihy. It feels good to wake up and work in this company. Apart from the incredible decarbonisation benefits that we can offer, we're a project of national significance generating 760 primary jobs once in operation. And we're doing stuff. With the mining licence being granted, we've awarded 2 new contracts. One is an access road to make life simple as we're starting to do things on site. And then the other is a very important debottlenecking of our construction timeline by getting straight on with building the temporary water pipeline so that we don't have to start trucking water in to make concrete when we start site works. So where does that leave us? The focus at the moment is financing, which is interrelated to contracting, and the mining licence unlocks all of that for us. Then we're into construction, and the overlap there is deliberate. We do have the cash balance to do significant early works at our project. We can keep the construction timeline intact by doing those early works. We're then moving into, we expect full production by 2027, a simple ramp up, and you can see from that that we've got the resource to then expand into 7 million pounds production. And that's something we'll be talking to the market about more this year, just to further emphasise the leverage that we've got. So thank you for your time. I'd love to talk to you more about Bannerman. We've got a good contingency here. It's an extremely unique investment proposition in a sector where the light is shining very brightly at the moment. Good morning.